Hey there, good afternoon traders. This is Trader Tim from over at eminimind.com doing a Monday market analysis video to get things started for the week. You can see on my S&P chart here, I've got my low to high anchor point drawn from the 50%, which was here around 3,000. That's the anchor point that I'm using to highs. And reason I'm using that is because our short that I have drawn up that we haven't quite traded at yet kind of puts us down in the middle of that 50 to 61.8. So not going to be real surprised if we kind of chop around here with gaps um, with a little bit more volatility, at least until we can break above the 61.8. So break above, we'll just call it 3,500, or break below 3,200. So those would be the two lines in the sand that I'm watching for either a bigger spike in volatility and a move down if we break 3,200, or a decline in volatility and a spike up if we break 3,500. Now, right now, the volatility is actually not that high. If we look at the VIX, and as we do, compare it to prior weeks and months, we're sitting right at the about 25, and that's kind of where we've been for most of this summer. Just a little bit above or a little bit below. And so if I go back to the S&P, one thing that's interesting is we can see that there's been a little bit of a decline in volume. Now looking at the SPY chart with a two big days here on the two moves down, and then as we've moved sideways, had a little bit of a decline, but more volume than we had through the summer. So good news is volumes picked up a bit here in September. Typically that's what we see. But when we get a bear flag like this, if you want to consider, these 3 down days, the pole, and then now we're moving sideways in sort of a flag shape or a rectangle like this. If we, don't resolve by moving lower, typically within 3 or 4 days, then we just kind of go into a range bound chop fest. A nice clean bull flag or bear flag typically resolves in the next 3 or 4 bars. So if you're on a daily chart, it'd be 3 or 4 days. If you're on a 5 minute chart, it'd be the next 3 or 4 5 minute bars. And so that's what I'd be looking for here. We've kind of gone beyond that now, today being the fourth day, and we've really just gone sideways. Going back to that VIX comment I made about the VIX being fairly low, I closed out of my hedge here at the close on Tuesday of last week, and that contract, even though it's in the money, those 340s, the contract is going down in value, even though like on the 11th we went lower than price was at the close on the 8th, just because the volatility has come down. Even if it's just a couple of points, those contracts can kind of erode. So my take or my approach on really any options play is to take it off at the close, maybe a little bit sooner than I would if I was holding the underlying stock, where I could simply trail my stop or just hold on to it, and it's a linear relationship. If price goes down, the stock price goes down, and it goes down. That's it. If the stock price goes down and you're holding the option contract, well, your option contract may not increase in value. It may stay the same or go down. So just something to consider as we kind of look at the bigger picture. If we just quickly run through, so that's the SPY, and then if we look at the Dow, um, didn't quite break its swing low from the 8th over here on the 10th and the 11th, more of like a basing pattern. But again, look at where the short takes us, right to that long. And then the NASDAQ is sitting at the long. Didn't hit its short yet. And I can adjust my anchor point down below. Whoops. Get rid of that first one. So once we touch the long, so the long has traded first, meaning we came down and we touched this 50% of the long side. Now we want to watch, that should have more momentum coming into the short, and we'll see if the shorts can overtake those new long positions. And then lastly, the Russell here is looking pretty good as far as a move down to this 50% long. It came close to the halfway back short. I left this one up because it was within a point here on the IWM. But again, same pattern as far as just moving sideways. So we'll see what happens this week. I wanted to touch on the ES really quick. If we go to Friday's trade, it was actually fairly range bound in the morning session, but there were a couple of decent plays on the 5 minute I just wanted to highlight. So drawing from the first full halfway back short, that got a reaction. It didn't make it all the way to its negative 23, but we did break the swing low here. And then once we broke that 61.8, we ended up trading in a nice little long, like so, 50% up to the negative 23, and then that one traded cleanly. So then the next one was a go, and that one traded 50% up to the negative 23. And whenever I'm targeting a negative 23 on a 5 minute, I just round, a point ahead of it. So like 330. 33.59 would become 33.58 as far as setting a profit target. Just because sometimes you get close, and rather than try to futz with it near the target and drag my order down, I just, give it a point of wiggle room and then call it good. So even though we were pretty range bound, as far as, if we look at where we opened compared to where we were 2 hours into the day, we hadn't gone anywhere. There were still some trends. You can see, lower high, lower low, lower high, lower low, and then broke the swing high, higher low, higher high, higher low, higher high, came down, broke the swing low, and then drawing from highs to lows. So there's just because we haven't actually gone anywhere in, an absolute number, doesn't mean that there can't be trends within the day. So just something to consider. It's a little bit more nuanced when you're coming in and looking at the swing highs and the swing lows, but that's in a lot of ways, that is the fundamental of the trend. So if you can, go ahead and print out like a 5 minute chart like this and just go through past days and mark up the swing highs and the swing lows and get those reference points, and you can, draw, okay, here's a little bit of a downtrend, here's a, 45-minute uptrend, here's a little more of a downtrend that then gets extended lower and takes us into the lunchtime session. So training your eyes to see those swing highs and swing lows and then the breaks of those levels is really important. So as we put, here's a low, here's a higher low, here's another higher low, and then all of a sudden this price level gets broken over here, and that's the indication to change direction from, drawing up long setups to flip and draw up short setups. Tomorrow we'll be doing a live trading session, as we always do on Tuesdays. You can check that out, emoneymind.com/VIP. And if you have questions, feel free to put them in the comments below. I hope everyone has a great week, and I will talk to you all soon.